Hi guys, 21st of June 2023, Wednesday, MAO with Kel once again. Now, NASDAQ won't crash. I can tell you that. That's for sure. All right. But I think that let's wait for a bit of pullback. Then probably at the later stage, it's time to buy a lot more. What do you think? Let me know in the comment box, okay? Now, the thing is this, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, so let's discuss what happened last night. Okay, the Dow Jones down by 245 points last night, NASDAQ down by 13 points, S&P down by 20 points. But if you actually know this, we've been calling for sell the last 2 days and the market really came off. And of course, most of us actually booked profit yesterday. Congratulations to all. Now, of course, what we know is that the stock is down for the second straight day. The Dow was down by almost 400 points before the last part it recovered. And primary, one highlight is Tesla and NVIDIA up by this 5.34% and 2.61%. And of course, United Health Group actually up by 2.38%. So if you got these three of them, it would be worse. But of course, what's the reason for all this buying? I'll tell you more in detail. But main thing is this, the market now probably is taking a breather right now after the last few weeks of upside. So now the thing is this pullback just temporary or there's going to be more selling to come? Well, based on what we are seeing right now, that seemingly the decliners outpaced the advancer by 2-1, and primary was the energy that was the biggest laggard. All right, of course, Intel, Nike, Boeing also dragged down by 3% on average. But again, as I said, NVIDIA, Tesla, all went up. Okay, so the thing is this right now, it's more like a breather. Everybody knows that the market has been pretty bullish, and of course, the market has been up by more than 20% from the low. So that's the reason why the market feels that it's time for bullishness to continue. But of course, we all know that this Jerome Powell will be speaking later tonight, and of course, probably you've been asked a lot of questions regarding about his view of why pausing interest rate, and of course he will come out and say something. And of course, if he's going to be a little bit more dovish, that will push the market recover. But of course, if he decided to say, you know what, yep, because we're preparing for more rate high coming in and it could be more than 2, oh my god, that will be a very hawkish one. So the market will be watching him speaking later. And of course, we all know that now the investor bullishness has rose to 45.2% from 27.4% according to the American Association of the Individual Investor, AAII. All right, so that's the reason why when you see so many people are bullish, that's why we expect the market to take profit last 2 days, and it really came. So now the thing is this, the market may be a bit overstretched according to Mike Wilson. Now apparently Mike Wilson came out and says that he is also admitting that he's a little bit wrong compared to his other parties in the market. So now we have Michael Harnett and Mike Wilson, both of them actually saying that they are a bit wrong because it's like too much pressure on them right now. So when you have this type of thing happening, right, usually that's where the market U-turn. What do you think about that? Now, one thing is that the housing starts came in 1.63 million, then the 1.39 million, that is much higher. This is not a good sign. That means that the America is quite okay. There is more room for the upside in terms of rate hike. So that's the reason why I think that the market hasn't come off. I mean, it hasn't bottomed out yet, yeah? So let's look at Tesla. Oh my goodness, Tesla shoot through the roof. Now it has covered the gap. Oh my God, this is incredible. There's also a gap here itself. I mentioned to you about a couple of news a few days ago. I said that the gap will be covered by Tesla, and indeed it was done. So think about this, at 160, that was where the stock was, and now it's all the way to 260 area to 275. Now imagine up by $100. So the trip to China really pays dividend. Now, of course, on the technical side, is because the market broke above MA 200 at this $200 level. That also propelled the market higher. But primarily, the interesting thing is this. We all know that now in Europe, the inventories are actually quite high. So, okay, that should actually bring down the price. But Wall Street itself, don't care, don't bother, because now everybody is going for the Tesla energy pack itself, the battery pack. And that's the reason why a lot of people now feel that Tesla can go even to 300, some even 400. So for me, I'm not going to do anything over here for Tesla. I think that this is, don't short a running stop, just leave it alone. If you don't buy, wait for pullback. For me itself, I'm going to wait. Because if you look at my TWB chart, right, you can see very clear that what we should have done is to buy right here when it was trading at 170 zone, which of course I missed it. And of course, this is really incredible. The KSI all the way from this day onwards, the boys have been buying non-stop, and the buying momentum has been very strong indeed. So that's the reason why I propelled the market all the way up. So until we see probably 282, then maybe we'll see some profit taking to pull it back down a little bit before the potential upthrust again. Because now, like I say again, there's a lot of people buying Tesla, and the short sellers are primarily all out of the game. All right, so watch out for this. Don't fight with the big boys, okay? Now, one thing is that now there are people saying that there could be one more rate hike, and apparently it's from ANZ. And of course, the next FOMC meeting will be on the 35 days from today. And most people are looking at a rate hike. All right. So there was a rate pause, right, in June. And now they're going to a rate hike in July. So not too sure why is this done this way. But nonetheless, the market seemingly is buying to that. The only thing is this, it is 25 basis point. Would the market consider go 50 basis point if the numbers are high? So if that's the case as well, right, I kind of believe that the dollar will return back up again. I believe that the US dollar will go back up to 105 area. Now, currently now it's 102.60, and it's a base out here is on a Fibonacci. Hence, therefore, I think that in the long haul, there is a chance for the dollar to go back to 105 area. But of course, again, to hit 104 would be the first target. So let's see whether that will happen. And if the dollar goes up, then definitely we're going to see a bit of selling on the gold and silver market, and of course, probably Bitcoin too. Now, regarding Bitcoin now, Bitcoin recently has just touched my support level at 25,000. And I mentioned this strongly that if the market cannot break 25,000, it will go back up again. And incredible, it did that, guys. It really did that. This drawing was done about 5 days to 2 weeks ago. And I said that if the market Bitcoin can't break 25,000, it will go back to 28,000. So this is done. But the thing is this, why is it happening? Well, apparently, based on what we're seeing right now, the dollar movement and the Federal Reserve hiking rate the next month, all this should bring the Bitcoin lower, right? But apparently itself right now, we know that there's a crypto exchange backed by Citadel Securities. So that definitely probably why we know some of the so-called crypto exchange got hit and then they get pushed away. Sometime in life, you should know things happen for all good reason. Yeah. So let's see how it goes. But definitely that's a welcoming news for all the crypto fans. All right, so let's go back and why I think the NASDAQ won't crash, even though it has a lot of similarities to this 1999.com. Now, if you remember this, I've read it a long time ago. Now, in 1999, I just started trading in a way. And of course, I remember that time everybody was going to get crazy. As long as your company got .com, you're going to get a lot of money, a lot of investment, a lot of buying from the retail. Remember, I got this favorite company called Tom.com that was done by Li Ka-shing's son. And of course, with that company went in crazy. And then when it came down, it was mad. It was all the way down until I think they were filing for Chapter 11 in the wrong. So the thing is this now, the thing is that in September 27, 1999, the NASDAQ was at 2737. In fact, it went even higher to 4,000 level before the U-turn come in. And at the time, everyone was just talking about being in the .com business. So remember this, in 1998, there was a guy who is called Henry Blodgett, okay? He was actually one of the analysts, and he was saying that now this Amazon is good. It's a counter that can buy. It's 150 right now. He suspects that you go to 400. Now, back then, okay, people were just watching him, not really popular, but okay. And then he said this, as with all internet stock and Amazon valuation, it is clearly more than art than science. And we believe that the stock will continue to driven higher in large part by the company's outstanding revenue momentum. Now, this was done by Henry in December 1998. And of course, we all know that by year 2013, that's basically many years later, then finally it hit the $400. But still, again, we must understand that back then, the stock, without the stock split, did go to 400. And of course, he got popular. And in fact, after that itself, he basically worked for Merrill Lynch. Now, Merrill Lynch employed him to get it done, to do things. And okay, he was doing okay. But then after that, we all know what happened. The NASDAQ crisis came in. All the calls went wrong. His personal investment of 700,000 was also gone. So the thing is this, that was like the last part of the whole NASDAQ thingy. And of course, right now, he's banned from financial industry because he was actually using some unorthodox method to actually get his numbers up. And of course, that's why they banned him. Now, why I'm bringing this story in? Because we have seen now similar things happening now. Now, if you look at it right now, the current AI revolution and the .com mania, the momentum, the movement seem identical. Hence, therefore, be careful of July. By right, there'll be a pullback in July to August. Then after that, probably in the later part of year to next year, they should have the wow movement. All right. So that's the reason why I'm telling you this, guys. You don't jump in right now, wait for a while, wait for a good pullback, and then you can go in and accumulate as much as you want. So the thing is this, as long that your company now got a .ai in the back, you're going to have a lot of analysts telling you it's time to buy. Like now is this guy, Dan, says that now this C3.ai is in the target price now is going to move up from $24 to $50. Wow, okay. But before you jump into that, let me tell you this. This company is the total revenue for last year and this year just hardly budged higher than 0.1%. But their loss on operation has leapfrogged, okay? So for a company like this, they're losing money, but yet the share price is being pumped up. And basically that's how it works, because Wall Street don't buy what's happening. They are not this rational. They're buying on context of speculation and of course forecast. And of course that's basically until the last person hold the hand, get the last part of it itself, right? So the thing is this, right now you can see C3.ai. My goodness, this count is up by 300% for this year. Yes, 300%. From the time it sell about $10, it's now $44. So that's the reason why you can see that AI mania is exactly what's happening back in 1999. So look at 1999 now, like Cisco, yeah, went all the way to the high of 80 at one stage of time. Then after that, it went all the way down to a low of 10 to 15. And it took them many, many years. And to date, it's still below the all-time high. So that's why sometime in life itself, right, you must be very careful jumping into the bandwagon stocks. And of course, there's this company called pets.com. This counter was trading about $10. And by 1 year later, oh my goodness, it went to zero. My goodness. So all this actually tells you that eventually all these team stock will come to the end. So we had seen before, and I want to warn you again. To me, it's all right. You must understand now. The PE ratio back in NASDAQ in 1999 was about 60.1. Today itself is 20.6. Now this is compiled by CNBC, so I didn't have time to really go into it. But because of that itself, right, that it does seem that there's room for further upside or even speculation for the later part of the year. And you must understand the PE ratio back then for Cisco, Qualcomm, and this Yahoo was ridiculous at 148, 166, and Yahoo was incredible, 623. But we all know that after that, itself, Yahoo continued to go higher before crashing down all the way. So the thing is this, for today now, like NVIDIA is only 50.1, Apple 29.8, Microsoft 22.7, and Amazon 85.7. So these are the PE ratio now. It's of course higher than the norm, but compared to what happened back in 1999, we're still pretty far away. So the thing is this, probably now the environment is much controlled and people are watching it closer, yeah? All right, so with that, let me bring in my second slide. Okay, you can see right now, back then, pets.com, they lost money. They lost overall, even though they got volume, but it wasn't enough to compensate the loss on the cost. But you compare now to NVIDIA, they made money. The revenue is at $7.19 billion. Hence, therefore, they were guidance of $11 billion. So that's why they're going to give this counter is still pretty good. And of course, if you look at the cash holding, now you can see that Cisco, Qualcomm, and Yahoo, they hold, well, Yahoo hold less than $1 billion in cash. Qualcomm and this Cisco is okay, but if you compare now today, oh my goodness, Apple is holding $200 billion in cash, Alphabet 169, and of course Microsoft 132. My goodness, they're holding so much money. So it's going to be very difficult for the market to come down because you can do a lot of buyback. So this is from CNBC. I think it was similar what I showed you earlier. Just be careful yourself when it comes to about mid-July to this August period. It could be a lull period for you guys, so careful. But if not, it's all right. This second half, the second part of the year, towards the end, this is going to be a very, very big one. So I think that you should really watch it, yeah? All right, so in terms of index now, you can see the NASDAQ. Well, it came back to the same technical point that we had previously. By the time that you can see right now, the RSI is higher. So that means that the market is kind of like watching it very closely. Now, I know that basically we have a strong agreement, all right, that what I will do. But the thing is this right now for the NASDAQ right now, I think you should be careful. A pullback of sort will be good. A further pullback to 13,000 will be the most powerful, most excellent for us to buy back again. But of course, the market has went away from it. Before you come out to 13,000, something bad must really happen. But the most important thing is this. For guys who want to chase on the NASDAQ, I really think that you should just wait for a while, let the price come down, and then go for it. This tide is too big at the moment right now. Okay? All right, this is Kel signing off. Take care. Bye-bye.